Let's catch up with Greg Fairley. Now, Greg, in telecom news today, Etisalat is aiming to broaden its reach in the GCC.
That's right, Eunice. And today, the Kuwait's Zain, the subject of a bid. More on that in just a moment. First of all, to our top business story this evening. The Dubai Crown Prince has praised the Emirates partnership agenda as a creative initiative. The agenda aims to produce policy recommendations to further the sustainable growth of the Dubai tourism sector. Amal Al-Jabri reports.
Crown Prince of Dubai and Chairman of Dubai Executive Council, His Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, said today he was confident of the public-private sector's ability to open up a constructive dialogue for energizing public-private partnership in key development sectors that serves higher national interests and maintains the UAE's leading role in bolstering regional and global economy. The Crown Prince of Dubai made his remarks as he patronized the first joint session of representatives of the public and private sectors in the Dubai Partnership Agenda launched by the Dubai Executive Council with the support of His Highness Sheikh Mohammed bin Rashid Al Maktoum, Vice President, Prime Minister and ruler of Dubai, as an ideal platform for interaction and consultation between the government departments and private firms. Sheikh Hamdan lauded the Dubai Partnership Agenda as a national innovative initiative, enjoying the support and follow-up of Sheikh Mohammed. The discussions at the first meeting was dedicated to the tourism sector, in the presence of His Highness Sheikh Ahmed bin Saeed Al Maktoum, Chairman and Chief Executive of Emirates Group and Chairman of Economic Development Committee, as well as representatives of the tourism industry.
Our session today focuses on the tourism sector, and both public and private key players in the field are involved. Our recommendations will be sent to the Dubai Executive Council for approval.
Officials of the Dubai Executive Council said the agenda embodies the leader's vision for the private sector to play a role in partnering the government.
The main idea was put forward by His Highness Sheikh Mohammed bin Rashid Al Maktoum through the sessions of the Dubai Executive Council, and therefore His Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, Dubai Crown Prince and Chairman of the Council, recommended a platform of interaction between us and the private sector.
It's a very good initiative and we are happy to take part in it. More communications between public and private sectors will surely lead to better decisions.
The agenda aims to upgrade the role of the tourism sector, and we hope to achieve great results in the near future.
Officials also pointed out that open dialogue between public and private sectors would support the sustainable growth and increase the competitiveness of the nation and Dubai. Amal Al-Jabri, Emirates News.
The government of Dubai, acting through the Department of Finance, today announced that it has successfully priced a $1.25 billion dual tranche bond. Investor appetite was so strong, the issues were 4 times oversubscribed. The bond has a yield of 6.7% on a $500 million 5-year tranche and 7.75% on a $750 million 10-year tranche. These bonds were priced at par. The issuance is part of the updated Euro medium-term note programme, which was established in April 2008. All proceeds of the bond will be used for general budgetary purposes. The dual tranche bond sale was extremely well received globally and generated a large order book with over 370 orders of approximately $5 billion US. Orders were made by a wide range of high-quality fixed-income investors, including fund managers, insurance companies and banks. Deutsche Bank, HSBC and Standard Chartered Bank were the joint lead managers for the issue. Commenting in a statement, the Director General of the Department of Finance, Abdul Rahman Al Saleh, said, "We are very pleased at the positive market reception to the bond offering, which demonstrates increased investor confidence in the strong, long-term value proposition of the Emirate of Dubai. The government has taken prudent measures to control costs and manage its budget deficit, and this successful issuance provides Dubai with additional liquidity for general budgetary purposes." Dubai is redrawing its strategy map, buoyed by new opportunities brought about by the global financial downturn. Core business sectors will be strengthened and enhanced, and new ones developed. Trade, retail and tourism have always been the backbone of Dubai's success story, and never more so than they are today. Now Dubai's Department of Finance, in a study presented to the London Stock Exchange, outlines some updates on Dubai's Strategic Plan 2015. Originally published in 2007, it laid out details of economic development, social development, security, justice and safety, infrastructure, land and development, along with government excellence. Now Dubai is intent on specifically concentrating on a number of key sectors like transport, logistics, hospitality, tourism and renewable energy. Real estate and construction, often the most long-term form of investment, has, like everywhere in the world, been affected by the global fallout. Dubai alone announced that half the 980 projects registered with Dubai's real estate regulatory agency, RERA, have been either cancelled or in the process of being cancelled. Dubai is being transparent and realistic with previous planning schedules, and also announced this week that its 4 billion dirham tramway system will not be operational for at least 3 years until 2014 due to market conditions. The announcement last Monday of a 3.7 billion dirham bond issue from Dubai, along with recent announcements of the finance restructuring plan of Dubai World and an increased role for Dubai Islamic Bank in mortgage lender Tamweel, are all seen as important steps in rebuilding a confident financial and business environment in Dubai. According to Dubai's finance department, approximately 20 billion dirhams of the Dubai Metro's cost has already been paid. That's 70% of the total expenses. The Dubai Metro's total cost is estimated at 29.6 billion dirhams. On top of that, nearly 4 billion dirhams is being paid by the RTA to the Dubai Rail Link Consortium between May 2010 and September 2011. Since its launch, the RTA has introduced the Smart Card. It allows passengers to travel on trains, buses and water transport, as well as use associated parking areas. And news just in, Etisalat has offered to buy 46% of Kuwaiti telco Zain in a deal that would be worth $11.8 billion. Zain offloaded its African assets earlier this year in a $9 billion deal with India's Bharti Airtel. And Emaar Properties said today it will issue $375 million in convertible notes due in 2015. The notes will carry an annual coupon of between 7.25% and 8.25% and will mature on December 20th, 2015. Dubai shares rose for a second time this week, pushing Gulf markets higher. Emerging market stocks climbed to the highest since June 2008. Aramex climbed 4.6%, recording a 27-month high, taking its September gains to 34%. Emaar Properties rose 0.8%. Arabtech ended up 2%, and DR climbed 0.3%. The Dubai benchmark rose 0.7% to end the day at 1,700 points. Meanwhile, Abu Dhabi's index climbed 0.6% to nearly 2,700 points. Here come Wednesday's markets and currency numbers in detail. Now, there are mixed signals currently coming through concerning the health and current projections of the global economy. Emirates News spoke earlier to one London-based company that specialises in investments. Guy Monson gave us his view on stimulus packages in the West and beyond.
I think the initial fiscal stimulus, this was a spending program, was a good thing. I mean, obviously, following the Chinese model, which was the biggest stimulus program in the world. Actually, interesting as a percentage of GDP, the Saudi program was the biggest in the world. But the fiscal programs with little reserves, large debt to GDP numbers just can't go on. So they're changing from fiscal to monetary policy. This means they'll do anything to keep not just interest rates low, but long bond yields low. And this will cause a liquidity bubble which should stabilize Western growth, but has enormous implications for the rest of the world.
Guy Monson there, managing partner at Saracen and Partners. And tomorrow we'll have more of that interview discussing gold, hyperconvergence and growth sectors for investment in this region. Well, that is the latest finance and business. Eunice.
Thanks, Greg.